What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex. We're going to be going over SDC, SmileDirectClub, which is currently one of the most talked about stocks on Reddit. So there's a lot of volatility that's going to be going with this stock, but it's also going to be a short squeeze play as well. If you take a look at the highest short interest stocks, SDC is number 6 on the list with a short interest of almost 33%. So after earnings, a lot of these hedge funds ended up shorting the stock. Stock got killed. And basically, a lot of the retail investors are trying to buy into the stock, pump it up, and cause a massive short squeeze with the stock. So the stock is still down 14% on the past 3 months and down 33% in the past year. So it does look like a really good recovery play, even if you're in it for the long term. Just buying and holding shares would be a pretty good strategy right here as a nice recovery play. But right now, a lot of volatility. We go to the highest volatility stocks on barchart.com. We can see that SDC is definitely on this list somewhere. Yeah, over 200% implied volatility. So the stock is going to be pretty volatile, especially when the market opens on Monday today. Because this stock is moving in the after hours, up 19%. A lot of people are definitely watching the stock for a short squeeze. But of course, with all these short squeeze stocks, you got to be careful. It's very risky. As fast as it can rise, it could also dump just as fast if the retail investors definitely lose interest in the stock. So the best way to play these stocks, especially if you're in it for like the long term, you want to trade options by selling options. Because as we mentioned earlier, higher implied volatility equates to higher premiums on these contracts. So what we could do is something like a sell cash secured put. And if you're in it for the long term, as we can see here, premiums are very, very high. So you could sell something like a $6 cash secured put and receive $37 of premium per cash secured put you sell. 70% chance of profit, pretty high chance. But if you want to be a safer 5.5 strike, would be pretty good, actually. That's something that we'll probably be opening when the market opens. Either that or the $6 strike, especially as a nice recovery play for the stock, which has gotten killed by earnings and is slowly recovering. It does have a lot of good potential. But if you want, you could buy and hold shares of the stock. And then if you own 100 shares, remember, you can sell covered calls only when you have 100 shares of the stock. So you can get some really nice premiums just by selling some covered calls because call options are going to be pretty expensive when the market opens. Because remember, the options chain isn't factoring in this plus 19% after hours pricing. So once the market opens, the premiums are going to go crazy for these contracts. But if you want to be safer, just buying and holding shares for the stock would be pretty good. And even at $8 per share, it's still down quite a bit in the past year. So it does have a lot of recovery to go. And this stock and this company is definitely very good for the long term. Take a look at the charts here. They definitely got killed by earnings. They have really strong support around the $4 point as well as the $5 price point. So this stock is definitely going to be having a lot of upside potential. As we can see, it had a nice double bottom here, and there is a lot of support as the stock has pretty much bottomed out. So take a look at the Wall Street Bets chatter. It's definitely one of the most talked about stocks of last week, having almost 1,000 mentions. And next up would be SPY with almost 500 mentions. So definitely a lot of people are trying to cause this stock to have a massive short squeeze. Really nice price action going on. And I do like this play, but of course it's going to be pretty risky. So if you want to play this stock, play this short squeeze, don't put in too much money that you're not willing to risk because this is going to be pretty risky because as fast as it can run up, it can also drop just as fast. But you can buy call options for this stock. And I would just probably do September 24th or even October 1st, something as a short-term play, and just buy like one of these call options for like $25. If the stock ends up going to say $20 per share, you're making a huge percentage return on those call options. So really low risk, low capital that you're going to be putting in for unlimited upside potential for how high this stock will squeeze. But of course, as mentioned earlier, it's going to be pretty risky. Implied volatility is high, which means a lot of people have already bought call options, and price options are priced in already. But it can continue to still run up if the momentum is definitely going to be pumped up by the retail investors. So that's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on SDC, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.